Jessica, great to see you. We're seeing tech, particularly FANG Plus, so to speak, really get hammered. And so how does this impact, if at all, the valuations of some of these unicorns that are coming up next year?
It could certainly impact the valuations, but I think they're ready to go out. You know, they've tapped the private markets for the funding that they can. And whether it's Uber, Lyft, Pinterest, Slack, maybe Airbnb, but I'd probably push that to 2020, we're going to see a big year next year.
Ready to go out. I mean, it almost sounds, from what you're saying, that they need to do it, that they've already tapped the private markets, that they need another source of funds because these companies aren't really that profitable, if they are at all.
Take Uber, which is, scheduled to be the mammoth IPO of next year, losing a lot of money, even at $10.1 billion in revenue, and, already raised at $70 billion. I think so. In some cases, the private markets are drying up as options. I will say the private markets are still robust. We haven't seen a pullback in overall funding, but companies are really starting to look at the public markets. And, this year already was a record year for tech IPOs. We saw 14 tech IPOs that raised more than $1 billion, which is a record. And I think despite what's happening in the overall market, a lot of companies are looking at that and saying, now may be the time.
So, Jessica, of these companies that are at the top of the list, whether it's Airbnb or Lyft or Uber or Slack or Pinterest or whatever, if they do go public, what percentage of their ownership will they give to the public markets? Is it 20%? Is it 70%? What is it?
It's a great question. It's going to vary by company.
Sure.
Overall, we're seeing, even though some of these companies are profitable, so Airbnb, for example, doesn't need to raise the money. We saw Spotify do the direct listing where they didn't raise any money at all this year. So I think you're going to see a wide variation, but you're still going to see some pretty big allocations because for companies like Uber and Lyft, they do need the money.
And in terms of tech regulation, because that's something that is sort of hanging over the public tech sector at this point when it comes to privacy issues. Can those issues touch any of the ones that are in the pipeline awaiting IPO?
So less on the privacy side. I think the Facebook issues, the Google issues are really online ad issues, and we're certainly going to see movement on the regulatory front there. For ride sharing, there's always regulation as an overhang. Cities are always pushing back. But in general, I think the ride-sharing companies have worked through the bulk of their regulatory problems.